Hey everybody, welcome back to Complete Trader Academy's daily review. Today is March 14, Tuesday, 2023. All right, so news today, just up and down, not much, not what I expected. I guess they saved a lot of that movement for yesterday. Didn't take out previous day highs or lows, but it did take a previous lower high in yesterday. And let's go into a smaller time frame because you can't really see it. So keep in mind here that we, with this previous day and us reaching that objective that I deleted with this imbalance and it touching this weekly gap, right? I don't know if I mentioned it yesterday or not, but as you can see here, we tap in that weekly gap right here. Not gap, I'm sorry, imbalance, sorry. Imbalance, weekly gap, weekly imbalance. So once it taps in, that agenda is pretty much good as of now as a short term. Even though I'm looking for lower prices, you want to be nimble in understanding that you're going to get retracements here. So let's look how today went, and I still don't understand why what's it called, TradingView is skewing price like that. Started happening a couple of days ago. Anyways, so price opened up here for today. All right, miniature gap, and as you see, that's this line right here. So price is playing around, coming up right here. Didn't take out that high, so now we have that high and that high. And we mentioned yesterday that when we closed, we had that high and that high, right? And the previous lower high, if you recall. Please watch previous videos so they make sense. So here we have at 2 in the morning, London almost beginning, and it took out that low. See that? So we know it took out that low. Okay, so now we have this low, but this has been rated, right? So this price has already been rated. So you're automatically thinking on the top side in general is how your order flow should go. Now, we got CPI news though. So you have to follow the order flow, and I've seen this a million times. And we just to be honest, back in the day, we used to try to just catch the falling knife, knowing that we can catch it, and we used to catch it. I mean, it was gambling, but we used to catch it. But it's not sustainable because it could have ran right through. But here's the deal. So you got from 2 in the morning, you got this high, this low, this high, this low. All right, so it's shaking out right here, right? But we already took out with this low previous. This high hasn't been taken out. So as you see, the price is coming up, took out the high, came up, and I can't show you on a 5-minute. I have to show you the order flow, this order flow of CPI in a smaller time frame. So I even have to go lower than a 1 minute for you to see the order flow, but you can see it here. So here's the deal. So you got higher highs and higher lows, order flow. You can, even though we had this massive ass wick and when you watched it drop, as I've seen this a million times, the thing is when the price opened up, all right, at 8:30, it didn't shoot up and then come down. Because then I would look for a lower high, bought to a lower high. I let this play out, but look what happens. This comes, so this is like your higher, so this level right there, that's your higher high. That's sort of like your higher high. And then you would make a higher low. Well, if this was our higher, if this was our low right there, and that's our high. Following order flow, it didn't take out that low. Now, I'm not saying even if it took out that low, we couldn't have bought up. But look at the order flow. Came down first, didn't take out that low, left its higher low here, shot back up and came up. See how it came back up above this? So now this is my higher high, that level right there. You see that? That candle, that's a higher high. Yes, it came back up, but so you can consider this your final higher high. And where is your higher low? Well, we retraced back. We got more than 50% of this wick on a 15-minute candle. I think you can see it better. But price retraces, stops, price then breaks up above that high. So if that's my higher high and that's my higher low, what am I expecting? Another higher high, right? So we expect to go that way. So if that's your order flow, I got to go. Actually, I saw this on a 2-minute here. Here, excuse me. Oh, my Lord. So the 2-minute, once the price came up and came back in, it came into this 2-minute candle. If I expect it to hold bullish, I don't want it to break more than 50% of this candle itself, which is the demand block, which is the bearish candle. All right. So I don't want it to break more than 50% of the candle. That's what I'm looking for. Because if I don't see that, and if it comes down more, then to me, that trade idea is bad. Okay. But flow holds. Price comes in, comes back up. Then it comes back in and taps in. If it taps in, I'm on a 2-minute, but when it taps in, okay, you can see that now that's your, I hate that. To the right of my cursor, the low of this bearish candle, it doesn't break. I'm looking for that. That's what I'm looking for. Low, low, and then you don't want to, you don't want to consider this your low, even though this is a juicy imbalance and all that, because the problem is that this was your A to B to C. If this is your A to B to C here, that's fine. If this is your A to B to C, if you think this was it, no, because, well, this wouldn't be your A to B to C, because look, it's so close to the range. Now you could have took this trade here and put your stop loss right here, and it would have worked just fine. But it's like you would have been shitting bricks when it retraced. But if you have to just trust your analysis and trust that the imbalances will hold, okay? And that's part of this game. That's what took me forever to kind of like get good at, was just trusting that. Let me go to 1 minute because I was not looking at it the whole time. So look, you can see here the imbalance is right there, holds through. So the order flow comes back in, comes up, comes back in, and taps. You're an automatic buyer right there. You could have been a buyer right here as well. Okay, so going to a 10-second, this is how I frame the risk. Now, I don't always use 10 seconds, but it's great if you know what you're doing. Okay, because look, when the price came, as you can see here better. So look at this. So that was your high. Price shot down, shot back up. Now this is your new high. And then that's your higher low. You see that? Study this. Screenshot it, pause it, whatever. But price comes down, comes back into the lower part of this block. Okay, and then you start to see order flow. Comes up, comes back in this block. Could have been a buyer, but I wouldn't have took that. I want some more order flow, which I know I'm looking for at least a return in a 1 minute candle, which that was the candle here. You can't see it well in the 10-second, but you would have been able to see it clear there. All right, so price comes up, comes back down, comes up, comes back in. It's coming into this block now. See that? Now, if it's bullish, this block's gonna hold. If this doesn't hold, then this is not what I'm looking for, or I'm not ready because I'm waiting for blocks to hold. That's the whole point of what I'm really trying to say. So, anyways, back to the 1 minute. I put my risk at the half level of this candle, of this 1 minute candle. See that? Because if I know if it goes lower, I don't want to be in that trade, because most likely it would have came for this low and this low. But I have order flow on my side, and I'm believing in my bias. Yes, I wanted to sell and break down all the way down here, but I know that's not the case, especially when I had those highs here. All right, that's the most recent swing high. Maybe you can't see this. Let me go to a 5 minute. So you see this? Sorry, let me go to 15 minute. Okay, so you see this. This is where that was low. We bought up yesterday. All right, didn't take a sell yesterday because I was assuming it might have took out that high. Okay, so look, that's your target. When you're bullish, you're looking for a target here. Now I know we have that daily imbalance up there, and I know I have that high, and So, but at the same time, this is going to get consolidating. This is going to get shaking out. So I don't expect it to all happen. Now, I would have liked it to keep running, but it did not. We got a big bearish signal, and the price started coming down. So I took 80% off right there at that high, and I was trying to get here, but it just wasn't going to happen. But as far as order flow goes, this showed you, CPI news showed you what direction it goes. So you want to wait for the smoke to clear a little bit, and then you can jump in here. Okay. So that being all said, yeah, took it to this 80%. Now, when this started to happen, keep in mind, and I wish I could show you on your daily chart. I'm sorry, daily chart. If you could look on your ES chart or your S&P chart, you'll see that this ended up hitting a previous day's high on ES. Okay, so that's how, when I saw that, I was like, okay, can I even show you on this chart? Yeah. So ES is right here. See this right here to the left? That was your previous day high, and it reached it. Okay, and when it reached it, you started to see bearish activity. Now the Dow Jones did not hit a previous day high, but it hit this high. Okay, because they work in tandem, but one's a leader, one's a laggard, right? So that being said, when you're watching this, I wanted to, because I'm expecting a retrace as well, and this could be a dangling carrot. Price comes down and breaks. Okay, price breaks, comes back up, breaks again. So I've already got 2 breaks to the downside, but I was like, okay, well, this block, if it holds, it's going to buy up. Okay, but you didn't see that. Okay, you didn't see order flow back. So, but here, I tried to take a buy here and lost. See, when this imbalance got created and it popped up above that high, came back in, I was a little thirsty, and I was, just kind of trying to gain some more and lost, which was not a big deal. So obviously when it broke down this low, it lost. So price came up, breaks down again. Now this is a break of structure. So break of structure here, coming down, comes right back where? It comes right back to the equal level of that high, of that short-term high. That is a signature in the algorithm where it's, I mean, you can call it resistance or whatever, but you'll see that happening and it'll be protected. So what do? You wait for more order flow. You'll see the price comes down, comes back up. Let me show you on the 5-minute. No. On the 2-minute, here we go. Yeah. So on the 2-minute here, we got an imbalance here, and you're supposed to go through your 1 to 5 minute time frames, by the way. So you got an imbalance here, okay? Price comes down and comes back up. You see that? You see how fair that tap is? That's what you look for. It taps right, algorithm touches right above that imbalance, which is in between these 2 candles, and then you're an automatic seller. You're going to put your stop loss right above the high of that candle, of the first candle of the 3. And where are you taking it? Well, I know they love to come back down to opening price, which would have been, I'm talking about the 8:30 opening price and 9:30, but 8:30 is what I'm talking about. And then you have all this massive wick unbalanced going to a 15-minute. Another piece of confluence watching this come down was, it's the 1 hour. The 1 hour had this candle right here. We call this a shooting star. I don't really label candles, but we have that, the hammer and the shooting star. This, when it closed like this is a very good bearish sign as well. That was another indicator as well. Where am I going? Back to the 1 minute. And as you see here, price is rushing down. Oh, I was supposed to show you a 15-minute. This wick, if it's not gonna keep going up, obviously we're coming down. And where are you're gonna cover most of, they're gonna cover most of the longs. So that's what they decided to do, is cover longs. And then we have that big wick, which is the CPI wick, right? So I either want to see it stop at 50%, all right, or I want to take out this low. All right, so I don't know what kind of day that's gonna be, but I want to take it down to one of these. Now, when you see it coming down here, it didn't take out this low. I'm sorry, I apologize. It took it out by 1 point. Yes, it took it out by 1 point, and it did not take out this low. So now this is liquidity built. So I'm completely done at 80% here, and obviously it's about to come back up. But the point is that these are your targets when you're coming back down. Okay, so either 50% of this wick, 50% of this wick, or just taking out this low, or literally blowing through or taking that out. But it didn't take it out. And then look what happened. Price shot back up, came right back in the block. And to me, that's nice bullish order flow. And sure enough, it returned. So another confluence of the buy here is if you're watching the divergence happen, we also had this as the icing on the cake. So NASDAQ takes out the low, and ES doesn't take out the low, and obviously Dow Jones doesn't take out the low. See that? So, and that's another confluence of this. The market was strong at this moment. The dollar was useless. I mean, not completely useless, but useless enough to me. They were running in tandem, and it was consolidating and choppy. So I did not really rely on this at all. So, all right. Other than that, as far as tomorrow goes, Jesus. All right. As far as the rest of this week goes, now what do we have? We have this high here, which I'll draw it, and I definitely think this is the next objective, that high. And if not, which I know it will, and it really still might come in. But now that we're here, you're obviously going to have this as your next low as well. And now what I expect is price can either come back in and then come back up to take out these highs right here because they're a little too clean. And this is a closed, nice bullish candle. Not great, but good enough. So a retrace and pull back up into here, or we're just going to just make another low, meaning by coming up a little bit and then coming down, shooting down, because ultimately I'm still trying to aim for this. Now, when I say something like this is my target, it doesn't mean I want it to happen like right now or to happen tomorrow. I do expect retracements. I do expect choppiness like this to inch its way down and all that, right? So I hope that clarifies things as well. So let me see. If I went to a 4-hour, you'll see here that we're pretty much chopped up, and we've used. There's no imbalance of price around here. Again, we have some right here, and we have a little bit here, and then we have all this liquidity. We do have this 4-hour here. So I mean, as far as tapping up here, I doubt it, but that's the only place I see imbalancing. And then as far as back to the daily, we still have some of this weekly imbalance as well. So the low here is going to be pretty much your next target as well. So this could get ugly. I mean, this right here could look something like this and then come down. So I don't know if that's going to take days. I mean, you're going to have to ping pong here. You're going to have to, when you take out a high, sell. You want to buy to a high and then close, sell once you take that high, and then come right back down. You're going to sell into a low, and then you're going to take your profits when you hit that low. And it's just going to how it's just going to have to be until you get some better price action. All right. Hope this helps. You guys take care. God bless.